Welcome to Weekly Open. I'm Brian here with Cred and a surprise Don, who said we were on a break, but we are not on a break. He's here anyway. Before we get to them, let me tell you about our partners over at FTX. Go to weeklyopen.com/FTX, where you can trade today. You can dollar cost average directly in or out of the market, depending on whether you think is the time to buy or the time to get out. Do it with zero fees on the FTX app. They also got stocks now on FTX US and all kinds of other stuff they're always adding. Thanks to FTX for being our partners. weeklyopen.com/FTX. Let's get to the show. Let's start with Don. You were supposed to be on a break, and here you are.
Yes. It's raining, so I'm just kind of like
got nothing better to do.
Talk about like, fair weather friendship, right? Like in a nutshell.
That's fantastic.
But yeah, that's basically it. Like Cred reached out and was like, "Hey, are you on today?" I was like, looking outside. I was like, maybe I could. And my girlfriend's working, so I have nothing to do. Might as well.
It's incredible amount of flexing going on there.
I know, unbelievable.
It's raining, so I'm bored enough to be with you guys. My girlfriend, wink, wink, is out of the apartment.
I'm sorry, even before the call, he was like, I'm in a house with models. I'm sorry if people come in.
Cred, how are you doing?
Well, I'm sick again, so my immune system is clearly weaker than Donald's long thesis. But all in all, not bad. I'm sure I'll get better.
Cred also inside in the rain, but that's just his natural state.
Yeah, literally. How are you doing, Ledger? No one ever asks you.
I'm doing well. I'm wearing a Braves hat today to commemorate. You know, you got to do it the day after, right? So I went to a baseball game with my family yesterday. It was scorching hot, but super fun. The Braves won with a walk-off shutout, 1-0 in the ninth inning. Do y'all even know what that kind of stuff means?
Absolutely not. All I know is that wearing a hat indoors is just fundamentally wrong, so I stopped listening.
Well, the alternative is my hair is crazy because I have not showered this morning for you guys. When I wear a hat, it's because of my hair, not because of style.
Right.
But nevertheless, went to an American baseball game. It's kind of like cricket, but
more doping.
More doping.
But what makes you think that we know what cricket is?
Accents? I don't know.
Gentleman sport, yeah.
Yeah.
So you went to a ball game, basically.
I went to a ball game, and it was fun.
That's good.
Yeah. They won the y'all will love this too, the World Series.
Yes. Yes.
Seems like the type of thing that would piss crowd
off. A very global competition, yeah.
That's right. There are multiple Canadian teams.
That's good.
Nevertheless, we had a good weekend, and I'm sunburnt. And looking at the market, I'm actually encouraged that everyone is out and on the sidelines. Thesis is staying true, and the easiest pathway still seems to be at least sideways or up, but not like severe capitulation to the downside. Don, have you lost any sleep in your positions while you've been gallivanting?
No, not really. It's been playing out exactly like I wanted it to. So yeah, I haven't even really looked for the last few days. It's just always like every other day. I'm just like, if I have nothing to do, I'll just have a quick peek, and then I'm like, it's doing what it's supposed to be doing, which is sideways, right? Sideways or a little bit up. That's fine. But honestly, like I'm a little bit less bullish now than I was before I left. Mainly based on the fact that the S&P is starting to run into that resistance that I wanted it to. And I mean, Bitcoin hasn't even gotten close to where I wanted to. So that's not necessarily the thing that I wanted to see, but still not too worried. I'll be like back at my desk in a week for a day or two before like going completely offline. So might reposition at that point, but until then, I hope nothing changes and it's just looking okay.
Yeah. The VIX has been pretty depressed. It's up a little bit today, even though the market is just flat, which I guess is interesting. Keyboard Monkey was talking about the VIX a good bit recently, just as a signal to what the markets might be thinking. and basically saying if it gets crushed, then look for the kind of continued wall of worry grinding up, which makes sense to me. Essentially, less willingness to pay up for option volatility and hedging and whatnot. Craig, do you have any thoughts on where we are? I think Don's point about Bitcoin looking relatively weak compared to the S&P is interesting.
Yeah, I agree with him there. It's a tad on the slower side for my liking on the BTC side. Also, I think there's just a lot of ETH-driven activity, and that's been the case since the breakout, and has continued to be the case. Like I think for the first time, ETH options volume flipped Bitcoin options. I was looking at FTX 24-hour volume, and ETH is higher than BTC as well. It sort of seems to me, at least anecdotally, to be becoming a bit of a what could risk being a crowded sort of long the merge trade. If you were to ask me sort of anecdotally or colloquially, that do you think buying ETH into the merge a short time away from it when it's up over 100% from its lows is a good trade? Like I'll be probably forced to say it's not the best opportunity that the market will give you, right? And I think we've seen some empirical evidence of that as well, like December futures, December quarterlies on ETH specifically were backwardated, or maybe they still are. So there is some sort of risk premium being attached to that whole idea. So I think it's a slightly more technically complex narrative than it may sort of have appeared at first sight. And it's also far less attractive from a risk reward point of view than it was, when Dom was shilling it, to put it bluntly. So I'm sort of, that's got my attention. I mean, purely historically speaking, ETH taking the reins in the market has never been a terribly compelling signal for any kind of medium-term trend in crypto. And especially when it's the whole market piling in to a similar type of trade logic, I think there are going to be some late entrants to that. And I also think it's, that whole premise isn't maybe as simple as it seems, but I could be overthinking it. This is like a very 100 IQ take.
That must be why I like it. I've been thinking a lot, and maybe I've just got too much like ETH maxi brain, but I feel like Bitcoin has not really done a great job of like establishing dominance in a bear market. And I'm not sure if it gives me concern about the market as a whole or concern about Bitcoin itself. Saylor was talking about last night on Twitter, like, this is the only way you can send $200,000 for a 4-cent fee or something like that on a Sunday night. And I part of me wonders, like, as the block rewards continue to get lower for Bitcoin and these halvenings, they really want higher fees, but like Bitcoiners don't advertise using Bitcoin very much. And Udi talked about this on a podcast recently with Peter McCormick, where like Bitcoiners kind of have to figure out what Bitcoin wants to be when it grows up. And what I found interesting this cycle is ETH really found pretty good product market fit in a couple of ways with the decentralized finance side of things. And we've seen that play out better than centralized finance. Like if you consider the way, like say Aave and Compound held up versus, Celsius and whatever. And then also looking at the NFT market and people's desire to do the whole collectibles thing on Ethereum. And we still don't really have anything for Bitcoin. And this is the first time where I think the use case from last time is going to carry over to next time for ETH as well, right? Like it wasn't the ICOs, it was a whole new thing. But now this looks like it's going to hang on for ETH. Like there's going to be reasons people want to compute on ETH. And yet for Bitcoin, it's like, what do we have? Like, what does it have to show for itself in terms of how it's going to be used other than storing it? And I think that could have impacts on the fee structure, the incentive structure beyond mining that I'm just letting my ETH brain get to me. So interrupt me anytime. But do you think this is a warranted concern that people should consider as they're trying to like reallocate for long-term positions in a bear market,
Ooh, good question. For me, it's two things. I generally don't like when a lot of Bitcoiners drag ETH down with the argument, well, you can have DeFi on Bitcoin, and you have Lightning and NFTs, etc., all of that on Bitcoin. I'm not sure why that's necessary. or why that's even desirable. I think it's fine to use different blockchains for different use cases. And if Bitcoin ends up being quote unquote the boring one, the kind of gold equivalent, which is just sort of less experimental, more safe, more reliable, and gradually eats away at the world's monetary base or whatever it may be, that for me is more than fine as a use case, even if the explicit utility is less, right? Like, I don't think it needs to be everything, eat all of crypto as far as use cases go. I think taking over a gold-like role is plenty. And I think it's fine to be open-minded that other applications which make different design and decentralization trade-offs will capture other use cases. So to me, that's completely normal. I think part of the reason, as far as sort of looking at performance and allocating based on that, I think there's a kind of recency issue here, where certainly historically, but as well as recently, Bitcoin has always been the sort of collateral within the context of crypto market structure. So when you have this type of massive contagion, lender, wipeout, liquidation event, I think it makes sense that those types of collateral assets, the ones that are going to be forcibly sold, the big liquid ones, they're going to sort of struggle more to the upside and have a weaker bounce than the ones which are pushed around a bit more easily. So it's kind of those two things for me. I still need to be convinced that there's been a systemic, sufficiently systemic shift in order not to be skeptical of an ETH dominated market or ETH significant periods of outperformance or any sort of flippening language, etc. But yeah, my kind of bar for what it means for Bitcoin to do well and do its job, it's not a particularly ambitious one as far as, side chains and Lightning and DeFi, NFTs, etc. I don't think that's necessary. And to me, at the very least, that's fine. I don't know what Dom thinks of this.
Yeah, I mean, for me, it's basically, I'm just going to be bullish ETH until a little bit before the merge and then get the fuck out and don't look back, basically. I don't really want to hold it afterwards or into it at all. Now, that could be a mistake, right? But for me, I'd much rather buy it when it's pretty obviously mispriced into a really big narrative rather than hold it through a narrative in a bear market and pray to God that the narrative is just going to push price up. So like from a trader's perspective, for me, the trade is done the moment we get close to the merge, and everything else is just, I mean, for me, not much has changed, I think. It is notable that ETH has been outperforming Bitcoin in every bottom. We had that during the COVID crash, right, where ETH just went on and on and on, and we were all kind of like looking for a pullback at some point and never did, just outperformed the entire way up. But yeah, the NFT side of things, volume's been slowing down. The entire market's just been kind of getting smaller and smaller. DeFi is still like kind of working okay, but it's not really like massive. So I could see a lot of that if crypto grinds further for like a year or two, kind of disappear again. I don't think NFTs would do well if no new people come in. It's more inflationary than anything else in the market because it's just so easy to make more NFTs. So I think if we have a proper kind of sideways market for 1 more year or 2 more years or 3 more years, there's a good chance that all of the stuff that we see as fundamentally different just disappear. And then it's the same story that we've had in the last 2 years. So I'm not really too kind of ETH focused or kind of hyped about ETH. I'm just taking the trade.
Yeah, I think that's fine. I think your point about playing it into some part of the merge, but not really waiting to see how that plays out immediately during and right after the merge makes sense. I think where that could start to shift is if you see consistency for what happens to the supply, right? Like if it is deflationary and if it stays deflationary, and then if it essentially has more consistent deflationary monetary components plus the utility, if Bitcoin carries neither, if it's still slightly inflationary, has less utility, and we don't see like something come to fruition, like, whatever centralization issues with staking and whatnot. I just think there's potential for long-term Bitcoin to feel kind of Netscapey. You know what I mean?
I know what you mean, but the thing that I'm worried about, right, is because like we all like ETH better because you can actually do something with ETH. Bitcoin, for better or worse, you can't really, right? Like Cred said, it's basically like just sitting around being gold. And I know that I'm going to get shit for this, but it's just kind of like what it is. The thing is, do you really want to have something that is supposed to be doing something be deflationary? I don't think those two things fit together particularly well. I don't really see the reason for it. Because you want to have ETH be used, but no one's going to use it if it's deflationary and just price just goes up, and that's going to take away the biggest use case of ETH, the biggest advantage it has. I mean, I'm not like that side of things isn't really my expertise, but that doesn't make sense to me.
I don't overly disagree with you. It's one of the threats I think to ETH, ETH's future. It sounds a lot like a central banker. we need just a little bit of inflation to make this thing work, you know.
It's just so reflexive, right? Because it becomes
right.
more deflationary the more it's used, right? The more speculation, higher fees, stuff like EIP, etc. Those kind of burn mechanisms and other design choices really come to the forefront when usage is at its highest. But it's also got its natural supply and natural emissions and natural monetary policy. And if there's no speculation going on and the base layer isn't being used and gas costs zero, you really start to feel the supply. That's why you get the reflexivity to the upside as well as the reflexivity to the downside. And I just don't think, in general, volatile, speculative, reflexive assets make for good money. At least in the early days, you know, like I think it's sort of comparable to Bitcoin in that regard. Like Bitcoin has got good monetary-like properties, but the fact that we don't know how to value it and its volatility and everything else, certainly part of the reason why it hasn't eaten away more at gold's market cap and those types of traditional use cases, you know?
Yeah. Well, thanks for being a sounding board. I've actually been trying to settle this for myself. Like, I don't know what allocation I want long-term in Bitcoin versus ETH.
Just own both. It's a crazy solution, right? Like, I know obviously there's like a weighing question, but
terrible,
fundamentally, that's kind of what we go back to, right? Like when it comes to building a core/base crypto portfolio, like most reasonable people who've been around on a multi-cycle basis will tell you that like BTC and ETH are sort of money-ish. And those are kind of the bedrocks of your portfolio to varying degrees of percentages from cycle to cycle. And then whatever the fancy new toy is, you play around with that to add to your stack of BTC, ETH, or stablecoins. You know, that's sort of the base operating assumption.
Yeah. One of my other things that I try to do is figure out like how in my head does it make me feel about a price target being equivalent multiples, right? So if you just, I know this is not exactly where we are, but if you say, which would surprise me more, ETH at 20K or BTC at 200K? BTC at 200K would surprise me more personally.
Sure.
Whereas ETH at 20K, I could believe a little bit more easily. And so like, what's my path to a 10X is another component, which
it's going to be some shitcoin ledger. Come on, stop
Oh,
thinking about
I know, but like, but with with an asset that's a bit more, you know, not going to like completely die in a fire. So like your max drawdown is a little safer.
Very little safer, right? Like at a certain point, if you get like a proper cycle correction and something's down 60% versus 70%, I mean, yes, there is a difference, but fundamentally ends up being a distinction without a difference, depending on, you know, how high the upside is. Like, you know, if you were holding Bitcoin versus some other, you know, whatever the seasonal altcoin was, or ETH against Newcoin, or even Dogcoin, or whatever. Like, yes, you may have been slightly better off, but it's not like they're inversely correlated. You're still wrecked if you get the timing wrong, you know?
Yeah, that's true. If you get the timing totally wrong, but there's also a scenario where like ETH still does well, and it doesn't in a bull market, in a turn, if you will, and like something like Uniswap, respectable, whatever. Let's just say it doesn't perform, right? Like for some reason it does not perform. ETH does, and Newcoin performs. So like I still don't want to carry that relative basis, even if you would think like, oh, well, you know, Uniswap's going to perform better than ETH in a raging bull market. But I'm just, the core of your portfolio is kind of the collateral asset. Anyway, so theorized enough there. Should we talk a little bit more about markets? I kind of want to
stuff we can actually do.
Yeah.
Line make boing.
I'd like to spend a little time like we've done prior, but I feel like it's worthy of more on the Dixie. This is also, if I remember correctly, it's primarily like it's not even the euro having this big impact on the Dixie. I think it's mostly the yen. Um, but what do y'all think about the fact that the dollar is rolling over a bit here, looking like it might have its third down week? And is this significant?
Yeah, I mean, it does look like it. It does look like it's running out of steam a little bit to me. But yeah, I think it's kind of overdue. We had a bunch of very, very crazy weeks where you'd have like the euro go down 5% in a week, where it's kind of like, if you think about that, it's fucking insane. Like people, like the entirety of Europe just losing 5% of their purchasing power against the dollar in a week. That's completely insane to me. But that's what we've been kind of going through. So I think it makes sense for it to kind of take a breather. But just looking at your chart, I don't think there's anything that has really changed. Still looks really strong, and still looks like it wants to go up. And the euro against the dollar, like you're showing right now, is kind of like that seems completely and utterly wrecked. Just from a TA perspective, this is just kind of complete garbage. And it's kind of nice that I bought a bunch of Bitcoin with my like Bitcoin, ETH, and like altcoins with my euros, because otherwise I'd be coping. That is fucking terrible. Yeah.
Yeah,
I mean, just look at that. That's
you gotta hope that's the bottom, right? Like some sort of failed breakdown.
You need this to flip the magic green box.
Yeah, this is some sort of ledger death parabola type of thing.
Yeah.
I mean, the dollar, a lot of this stuff that's been putting pressure on equities and pressure on crypto by proxy is kind of taking a bit of a breather, in the form of dollar pulling back, commodities sort of chilling a bit, S&P up, kind of risk indices up, and so on. I was kind of expecting more from crypto, from that type of pressure being eased off, especially relative to the levels that it was at. I'm slightly less certain now, especially given I think you had some saucy moving average on the S&P when you had your chart on up. And in general, I think from like a weekly market structure point of view, it's pushing up to the kind of percentage gain and market structure level where you kind of have to raise an eyebrow, being like, well, this is still a technical downtrend. If there's going to be some sort of lower high, or overshoot through a high that's not going to stick, or some sort of just like continuation pattern in tandem with the trend, it's probably going to come sooner rather than later / from this area. I mean, there's a bit more space maybe towards like 43s, 44s at an absolute push, depending on what time frame you use to ascertain where that lower high might come from. But like purely structurally speaking, to me at least, colloquially or like anecdotally, it feels like the easier part of the move is maybe closer to done. So like ETH, really strong narrative, up 100%, kind of very close to its meaningful high time frame resistance. S&P on the back of dollar pulling back and a bunch of just macro stuff easing off, and what people interpreted as a Fed pivot, or at least a lack of forward guidance and becoming more data driven. That's nice. And S&P rallying, and I think that's just ended up in this sort of on guard for a potential slowdown or lower high type of structure. Anywhere between, I think, 41.50s to 43s, that's definitely like an eyebrow raising area for me personally.
Don, I don't know if you saw that about the supposed Fed pivot, but it was basically, okay, they've raised 75 because that's kind of where they had indicated previously. But they did so going into a time where there'll be a break. So like we won't get another number until September or something like that. So it's like, because they won't be able to do this again in a month, we're calling it dovish.
I literally think it's a case of no news is good news.
Yeah.
And that's sort of most of it. I don't think anything's really changed fundamentally speaking, as far as where we are in sort of the tightening / easing paradigm, or the health of the economy, and the fact that we're here Wikipedia editing our way out of the definition of a recession. Like none of that is terribly optimistic. But yeah, I think the market's kind of looking for any excuse to rally given how one-sided this move has been. And it's very much a case of no news from the Fed is going to be charitably interpreted.
Yeah, maybe an acceptance too. Just kind of like a linear tightening, not like we go from 25 to 50 to 75 to 100, like just keep smashing it until something happens. finally saying like, look, we're just going to keep raising rates because this is going to have the intended effect, even if we don't see it right away. Which is actually the first thing that seems logical to me. I feel like if they came out with a whole point, I would just be kind of in awe. At the same time, you see some of the demand destruction that's occurring. We should see a CPI print this week, I believe. Maybe it's today. I'm not real sure. And based on just what impacts that, inflation's probably peaked in terms of whatever 9.1%. It'll be hard to beat that, but it'll still be high. Like it'll still need aggressive policy or relatively aggressive policy to wrangle if you want to get it back to like 4.
Yeah.
But I think if they would have just kept increasing the amount they're raising by, the likelihood that they break something that was overdoing it was really high, and yet the market was pricing a lot of that in. So maybe now we just have this stabilizing new regime inflation, and you end up with reweighting of sectors of stocks and whatnot. And that's kind of what I'm interested in. Sideways stocks, but start to see sectors outperform. That kind of thing would be really interesting to me. I'm more on board now that tech is just going to stay wrecked and like something else will show up to be dominant, whether it's energy or dividend producing stuff or things whatever. I'm not sure, but what impact that has on crypto also will be interesting. Like, do we see majors run and alts lag? So far, that's not the case. So far, altcoins are really outperforming. Do you want to talk about that some?
Yeah, sure.
Go on, Dom. You're the altcoin purchaser.
I mean, I think it's just the same old kind of mean reversion thing. And something I wanted to say about the whole like S&P rally, whatever. We've talked about macro a lot, right, in crypto, and these kind of like macro people, but macro have been kind of all over the place, right? And the same story has been true in that market as well, right? It's not just the crypto people that keep saying that, it's them as well. Like, we can't go up because, and I think it's just a lot of people just being very, very off sides, basically. And you can see that very well in stocks like Tesla. We talked about this a little bit earlier in the pre-show, basically, where you now see like massive rallies. I think that's basically just like a bunch of people realizing that they sold the bottom and they tried to kind of rush back in. And the same thing was true in crypto, right? A bunch of people just completely off sides, and they're going to buy their favorite altcoins back, right? And I think that's why we've been seeing these kind of larger rallies on that front. I don't think that's going to be sustained for too long if what we're having right now continues. Like I said, I'm a little bit worried about the S&P rallying this much and the crypto market still like being this weak. So like I would definitely advise to kind of slow off, like risk off, or like at least like don't push too far now, because I felt like there was very little risk taking position a week or 2 or 3 ago. I think there's very, very high risk in taking positions now, especially in the altcoin world. There's going to be some outperformers, narratives, whatever, but I think if we kind of get rejected by the S&P or Bitcoin, the altcoins are just going to drop back down again. And when you see these kind of massive shitcoins kind of rally like this, very late into move already, that's where I usually start risking off. Now I can't, and I'm still going to be in my position for a while. All of this is kind of the short-term commentary that I make, because I think it's different based on the time frames, right? So like on the high time frames, just Bitcoin at 18, 19, 20K is pretty good. All of these altcoins hitting their like lows and then bouncing 100%. Like the lows that they hit are still like good entry levels. It's just, do you want to buy something like Cred said that is up 100% or 200% into a bear market rally where the S&P is at resistance, Bitcoin is kind of at resistance? I don't think so. So I think it's getting a little bit more dangerous on the altcoin front.
Yeah, that's fair. I think also contextually at the moment, there's no. I still think there's an absence of evidence for fresh inflows or some sort of retail friendly narrative in altcoins. You can look at like ETH transaction fees or users visiting exchanges or whatever else. Any type of aggregated data like that makes it pretty clear. And also, if you just look at which altcoins are outperforming, there's no clear sort of sectoral trend or outlier or I don't know underlying narrative that the market's chasing. Even looking at the top performers today, Chili's, Waves, ApeCoin, Leo Token,
Oh, you're saying
Radix, bloody
stuff I don't want to hear.
IOTA, Polkadot. These aren't sort of structural or narrative driven. If anything, it's kind of short-term catalyst, news-driven, sort of idiosyncratic, asynchronous stuff more so than some sort of underlying ebb and flow to the market. So it's good if you're like a nimble trader catching good entries, sort of point A to point B. But if you're looking for like fresh inflows, underlying trend pushing up, some sort of basket sectoral thing like we had in the past, I think you'll be waiting for a while. Personally, still very PvP.
Yeah, rotational games within the market. I mean, we saw there were narrative things around the ETH merge, ETC, then Lido as two good examples, like really, really direct, benefactors of the merge. And then I think DeFi caught a pretty decent bid relative to some other things. But yeah, I think the rotation game, are you better than Hisaka kind of questions, like in terms of determining whether you can pick up on the winners. Makes sense. I'm torn. BTC sitting here over the 200 week really has me. I'm supposed to take that trade, right? That is the reclaim. I recall you saying, Cred, that you were interested in a retest of the mid 23s
Yes.
last week. Like, are you interested in this trade? Do you think we have the, is this the type of thing that is worthy to you? Like, I don't know where you make your stop on that, but like,
I mean, it's a bit of a shit close, isn't it? Maybe that's just me coping. But, failing previous week's high and kind of closing right on top of the level isn't the best thing in the world. And again, I'm more looking structurally at like where the S&P is relative to potential lower high levels and the fact that ETH has been leading the rally. If ETH led the rally, why wouldn't it be the one that kind of stops the rally or the one that causes the slowdown first and foremost? And structurally, to me, ETH is kind of a fresh long there, be it technical or narrative based. I think at most you're maybe getting 1 or 2 good weeks into a deeper push into 1.8, 1.9, something like that. But anything beyond that, you need to see some pretty clear signs of momentum. Kind of like a BTC 6K reclaim in 20, whatever it was, 19, for that to be viable. As far as charts go, I can quickly share this.
Yeah, go for it, because I've reached scribble time for me.
As far as BTC goes, I talked about this sort of range high breakout shelf type of thing at 22, 23-ish, sort of where the blue lines overlap. Maybe something very quick and dirty into that lower boundary on like a short-term trading basis could be attractive as a kind of final do or die range retest type of thing.
That would give current bulls so much pain.
I mean, the fact that it would is terrifying because it's like barely even a dip into this all-important, range, 200 week, whatever. But like something like that would at least be technically justifiable and sort of tenable as far as BTC USD goes. So that's sort of on the cards. Although again, just the lack of momentum, even on this kind of breakout range high reclaim structure is kind of annoying. It's the same old story of, you spike the high and then it starts to bleed a little bit. I don't exactly love it. And as far as the comment made regarding ETH and where that is structurally, I mean, I think if you just look on the weekly time frame, that sort of paves the case. It's starting to push into where a lot of those kind of candle bodies are. Doesn't matter exactly how you delineate the level. You could use the lowest close here, or you can just use this swing high candle. I think that's how we did it in another show or newsletter, whatever it is.
Ledger, I think you're sharing the wrong.
Yeah, they're both the same color. I got confused.
Oh, sorry.
Can
you see now?
Yeah,
Yes.
yours
Oh,
is
great.
up.
Yeah. So I'm just pointing out in terms of like, I'm paying extra attention to ETH more so than I ordinarily would. I think there's good evidence for that, given the merge narrative, given the options volume flippening, given the perpetuals volume flippening. I think it kind of demands my attention. So I have to look at that structurally more so than just BTC USD, which in itself is a source of discomfort, but whatever. And I'm not sure how much reasonable upside I can squeeze on a push into this type of structure over the next 1 or 2 weeks as the narrative fatigue sets in, as some risk premium is sort of soaked into the technical issues, potential fork issues potentially associated with the merge and with the S&P macro lower high, whatever type of stuff.
Wait, are forks not bullish? I thought.
I mean, I don't know. Ask the people trading the quarterlies, right? The December futures on ETH.
Yeah.
They seem to have a slightly different view. I don't know. Ledger is the answer. Look, there's 100% a world in which I look back on this in like 3 weeks and say, what an idiot. You spend 20 weeks waiting for the 200-week reclaim. It happens, and you sit there and jerk off about ETH and the S&P and other things you don't understand instead of just buying the 200-week reclaim. Like, I'm totally sympathetic to that view. But at the moment, at the very least, there's nothing screaming at me that I should have any huge urgency to get involved. And maybe that's my fault, but when there is a screamer, I'll be the first to scream.
I think if you have a forewarning, if you say like this is when the snapshot for like ETH POW will happen, then it would be very bullish up until that snapshot. Like if it's like, oh, we already did it, then it's like a reason to sell off instead, but if some enterprising forker plans it right, I think you could have like a really nice outcome for fork war type stuff that to just fully mimic BTC and Bcash.
Yeah. There's a good next research article on that.
Yeah, it's going to be so interesting to kind of see all of this happen. I want to kind of show why I've been like a little bit held back this week anyway. This kind of trading that we're doing right now at the support, right, at like 20K, does remind me a lot of the time that where we bottomed in 2018. And you can see how we like put the bottom in, right, and it bounced quite heavily. And what ended up happening is that we grinded all the way back down again. And I could honestly see something similar happen again, where like we're trading at like 23, 24K. I could see it grind back into 20K again for 5, 6, 7, 8 weeks. And then 18K or 19K would still be an excellent entry, but it would kind of suck giving all the gains back, especially because this is going to lead to kind of panic in other markets, right? Like when you see something like this, kind of going back into that support, I think people are going to be freaked out, and I think that has quite a good possibility to happen. So that's why I'm a little bit on the defensive side of things. And with regards to ETH, I think Cred kind of said it perfectly. This is the best resistance we've got. 1.8K was my target from the get-go for a reason. I got a little bit more excited because I thought like the S&P has so much room. Why shouldn't the ETH merge kind of lead to more upside? But now that the S&P is at my resistance, right? I can show this real quick. We're like in an area of resistance. The monthly still has a little bit to go, right? But that's not that much. So it's kind of like everything could slow down this month. And it wouldn't be surprising just looking at the ETH USD monthly, right? Even if we have like a narrative or whatever, to close like a little bit on the red side of things for next month to kind of be a little bit more explosive. I don't know. But yeah, I think it's starting to get much more risky, and all this kind of like hard forks or fork whatever talks that we're gonna have. I do remember what happened with Bitcoin and Bitcoin Cash, and then with every other fork basically. And the one thing that was basically very, very clear was that no one really knew and just why it should happen, right? So I don't think you can really make the biggest plans. Just gonna have to react to how the market prices things and then just go from there. So that's what I'm going to do. I'm not smart enough to kind of predict how all of this is going to play out. So I'm just going to react if I get to.
One other
I think
element.
Don nailed the meat, or what feels like the meat of the fear trade. right? The forced selling fear trade, like caught that really well, shielded it, rode it, etc. I'm not sure how much there is left to squeeze from that trade. And I'm not sure how good an argument you can make for fresh positioning into that trade now. And I'm also not sure what that next trade looks like. Is it kind of the 6K-esque reversion back sort of retrace and it's still a good entry, but it's scary? Is it some fork-driven thing? I don't know the answers to any of that, but it's far less sort of clear or unanimous than the main driver over the last few weeks, which was just that forced selling reversion thing. And it's not clear to me what the transition from that trade to whatever the next thing is looks like. So I think it's very much a kind of dawn market in that regard. If you've got the luxury of a good position and a good entry and time on your side, you can afford to sort of wait and see what the market gives and be nimble. But as far as looking for fresh positioning on the back of, as mentioned, ETH flipping, S&P resistance, Ether being up 100%, random altcoins pumping, etc., I don't think any of that lends itself well to high conviction new views on the market as it is right now. I should also just very quickly kind of disclose my own bias when it comes to this. I'm more looking for sort of much higher time frame, longer hold cyclical entries more than anything. I think from a level to level, support to resistance, that there's still plenty of volatility to make the most of that. But from a purely cyclical point of view, I still would prefer to see massive time before my kind of conviction levels go up on that front.
Yeah, I could definitely imagine both of y'all kind of saying we might be entering one of those time frames where everybody loses money because the breakouts don't break out as much as you expect for your target, and then you expect it to go down and you short it all and you get chopped up. Like everybody loses, bulls and bears, volatility compression, perhaps. I'd be fine with that. Like that's the type of thing that helps repair a market. To your point, Don, 2019. One other thing that I noticed when you pointed out that that move back then was that dominance as well went mostly sideways during that grind, but Bitcoin went up and altcoins did not once it broke, when Bitcoin broke up. And this entire cycle, every time Bitcoin breaks up, altcoins went harder and faster, except for the end of 2020, if y'all recall that, like after DeFi summer. After DeFi summer, Bitcoin ran hard, altcoins, especially the ones that had been hot, cooled down. But ever since then, like alts, all of 2021, any Bitcoin pump, alts pumped harder. And if there's a regime change there, whether it's Bitcoin or ETH, to our point earlier, that wouldn't surprise me either if altcoins just failed to keep up with majors and you saw more of a dominance run, even in the event of a significant recovery for majors out of a volatility compression over the next couple months.
Yeah, I would love that. I honestly think the best way to kill crypto in general is if every single time where Bitcoin goes up, the altcoins go up more, because at that point, people are less likely to invest in Bitcoin. And I still think that needs to be around. And then everyone just goes overweight into the altcoins, starts speculating, and then it crashes and everything crashes. Like that's the worst world. And we're kind of living in it right now, where whenever Bitcoin bottoms, altcoins immediately like attack, like everyone just kind of speculates in the altcoins. And I hope that changes, because that's very, very unhealthy, I think, long term.
Fracture the liquidity doing that.
Yeah. And I mean, I see it myself, right? So this usually when I'm buying, and I did this during the COVID crash, I did this in 2018, 2019 at the bottom back then. I bought Bitcoin like 80, 90%, right? And this time around, I was sitting there and I was like, do I want to buy Bitcoin or do I want to buy a bunch of ETH or a bunch of Solana and then add a little bit on Bitcoin on top, right? And what I did was I bought a shitload of Solana, of which I have sold a little bit. I bought quite a bit of ETH and then bought a little bit of Bitcoin. And that's not good in the grand scheme of things. Now, obviously, it's good for me because those went up much, much more than Bitcoin did, but it's not good for the market. And if me as kind of like a maxi, I'm not really a maxi, but I think like most of this stuff is going to zero and Bitcoin is probably not. If I do this, right, then there's going to be a shitload of other people that do the same. And as long as that doesn't stop, the market is still going to be unhealthy. And that's why I think there's a good chance that this isn't going to just be, okay, we crash to 14K and then we bottom and go to new all-time highs kind of thing. Or even, okay, we crash to 18K and we've set the bottom and now we're going to slow walk back up to 60, 70, 80K. I think it's going to be a thing of very, very boring grinds where you see a bunch of stuff in the crypto sphere die, especially in the altcoin world, and where people can just kind of refocus, and the only ones left standing after a year or 2 or 3 of that is going to be the ones that kind of just either like big Bitcoin people that just in it for kind of their beliefs in Bitcoin, or the people that just were very, very good at picking the right altcoins. And then the speculation dies down a little bit on that front, and we go back to a slower market. And then at some point, the cycle repeats again, right? We've gone through this over the years so many times that I just don't think that's going to stop. And I think we're at this point where it's kind of like, it's very likely, I think, that it's just going to take a while for this market to refocus on the things that are really important. And that's why I'm saying like a year, 2, 3 wouldn't surprise me one bit.
That 2019 fractal is amazing because it's like 7 weekly candles in a row or something that are green. And yet almost nobody made money during that. The volatility was just 0. And it ended the week up every time, but you're freaking out about $2 moves, and 0.5% or whatever. And it just chopped a whole lot of people up. And people underestimate how hard it is to stay convicted and positioned, even when you have some confidence in the likelihood that the bottom is in, or up only as soon. When you just compress volatility and don't have significant price action for so long, it just makes it really hard to stay in the trade then once the volatility actually comes. So many people closed to that trade like well before 6K, much less like it went all the way to 14K. People were shorting it basically the first candle. I remember that night very specifically when it broke up from 4,100 or something, because so many people just were shorting it, closing their longs, saying, thank God I like made a little bit of money, I'm out. And then it just kept going up after that finally. But that compression just makes it so much more mentally difficult to maintain your trade thesis.
Yeah, I agree with that. I also think in terms of time, I don't think there's a ton of evidence to support like a shorter cycle theory. I think that was the cope for a long time when the market was up only. But I think with the macro backdrop, whatever that means, like at the very least, I think even the optimistic view has to be that the sort of duration between cycle to cycle will be equal to previous cycles, right? I think there's any good evidence to support the idea of shorter cycle theory. I mean, maybe some sort of argument that you've had so much forced selling, so much deleveraging, etc., that would be act as some sort of accelerant. But then on the other side of that, you also had just had savers getting wrecked. The magnitude of losses is bigger. Likelihood of more sort of heavy-handed regulations is higher. Reputational risk associated with crypto is higher as well. So I think that's quite easily refuted. It's like at the very least, I think your base case has to be like equal duration between cycle to cycle. I think because of the macro backdrop, you have to at least entertain the case that it's going to take longer from cycle to cycle to go from, even if the bottom is set, to go from low volatility, shitty conditions to like new uptrend with retail celebrities FOMOing in type of conditions. And I think that's in general supportive of Don's idea that this kind of stuff takes longer to resolve than we'd like it to. And I also think in general we're due and will see like a low volatility period in general, which will suck at the time, certainly if you're trying to overtrade it. But as a sort of symptom of the market, that would be a quite welcome sign, because it would mean we're closer to the end than some sort of midpoint at the beginning.
I love that. I love that adjustment of assumptions and the narrative, because instead of saying, oh, the last cycle was quick, so the next cycle is going to be even quicker. The last cycle was quick, so the next one has to make up for it on the slow side. It has to be really, really, really slow. After oil goes from whatever 80 to 0 to 130, just imagine how fast it can move in the future. And now what if it hovers at 100 for like 5 years? Just take the same concept and apply it to everything. That would be also that would be reasonable for a stagflationary environment where you have inflation, but you don't really have increased demand, and you end up just kind of in sideways markets and paying for a long time.
Yeah,
All
like
right.
our percentage decline, has been more shallow. Our time from, our time spent in the bear market, however you want to define that, has been shorter. So there are some overarching cyclical reasons to still be defensive, and have an open mind towards these moves being retraceable to a large extent, especially if we're still playing pony with the BTC 500. That's worth taking seriously, while that thing is still in what I think most people would reasonably describe as a technical downtrend.
Yeah. Should we leave it there?
Yeah, sure.
Yes.
Don, are you going to be here next week?
I
raining.
might actually manage to, yeah, because it's the only day I think that I'm gonna be actually at home even.
I'll check the weather forecast. If it's raining,
we'll expect
we'll
you.
know that you're in.
No, but I'll be home, so yeah, we'll probably be there. And but afterwards, like, that's gonna be the last one for the entire month, because then I'm gonna be on a road trip for the rest of it. So
Sweet.
Yeah.
Safe travels.
Thank you.
And sounds good.
Yep.
I'll see everybody next week. Thanks everybody for joining us. We certainly appreciate it. And I guess we'll catch you next time. Thanks to FTX for being our partners. Go to weeklyopen.com/FTX. You can trade there today. You can dollar cost average, in or out. Don't try to overtrade that chop. DCA straight from your bank with 0 fees. Using the FTX app. weeklyopen.com/FTX. Thanks for being our partner again. And we'll see you later. Bye-bye.